So we are continuing the discussion. In the last session, we finished up to interest receivable, isn't it? Now we have to discuss this advertisement payable 100 and paid in advance 300. Okay. See, advertisement is an expense. Definitely a concerned item is there in the list of balance. It is here, advertisement is here. Okay. And if you check this sentence, it consists of two elements. One is advertisement payable. Payable means outstanding. Outstanding. Advertisement outstanding means expense outstanding. Right? Then, and paid in advance means prepaid. So, two items are there in this adjustment. An expense payable or outstanding is there. At the same time, an expense prepaid is also here. So, we already discussed about expense outstanding here, wages outstanding, salary outstanding. We discussed how to handle these outstanding expenses. Similarly, this advertisement payable means advertisement outstanding is treated by adding this advertisement outstanding with the concerned item in the profit and loss account. It is an unmarked item, isn't it? So it should be considered in the profit and loss account debit side. While showing this advertisement on the debit side of the profit and loss account, you should add the advertisement payable or advertisement outstanding with that. Okay. Then advertisement paid in advance is there. Means advertisement prepaid. We discussed how to handle these prepaid items here, rent paid in advance. We discussed this. While discussing that, I told you that any expense paid in advance should be deducted from the concerned item. So, concerned item is advertisement. So, we have to deduct that item in the, that means advertisement prepaid should be deducted from the this advertisement and also show on the asset side. Okay. So, advertisement outstanding should be added with advertisement and show on the liability side. Then advertisement prepaid should be deducted from the advertisement and show on the asset side. Okay. I make it clear at the time of writing up the accounts. Okay. Now, just remember these things. Then come to another item, depreciate furniture. Depreciation means the wear and tear or reduction in the value caused to fixed assets. Fixed assets. Furniture is an asset used for several years. So, an item, an asset used for several years is called a fixed asset. Furniture, building, land, machinery. So, several such items may be there. These assets are used for several years, useful for several years. Such items or such assets are subject to some kind of reduction in their value, which is called depreciation. Okay, due to wear and tear, due to usage, its value may reduce, which is called depreciation. Here, depreciate furniture 10%. We have to find the concerned item, which is furniture. Furniture is here, which is 7,000, isn't it? Furniture is 7,000 here. And provide depreciation furniture 10%. We have to calculate 10% of this furniture. Means 7,000 into 10 by 100. Then we will get 700 as depreciation. Okay. That depreciation is treated by showing it on the debit side of the profit and loss account. Depreciation of any asset in adjustment. I am generally telling about that. Depreciation of any asset provided in adjustment must be shown on the debit side of the profit and loss account first. And while writing the concerned asset on the asset side, you have to deduct that depreciation from that asset. Okay. So, first treatment is show it on the debit side of the profit and loss account. Then, while writing that asset on the asset side, you have to show furniture on the asset side, isn't it? While writing that, you should deduct the depreciation out of that amount. Okay. Then another adjustment, it's an important adjustment. So provide for doubtful debt. Provide for doubtful debt. It is sometimes called a provision for doubtful debt, or reserve for doubtful debt, or reserve for bad debt. So all are same. Provision for doubtful debt, reserve for doubtful debt, reserve for bad debt. Okay, all are same. It is given as 5%. What did it mean? See, the amount we have to receive from our customers, the amount we have to receive from our customers is called sundry debtors. There may be several customers. We cannot name each and every person separately. So all these persons are commonly called sundry debtors, means who are liable to us, who are liable to pay money to us. They are called sundry debtors. Here, looking into this, sundry debtors amounts to rupees 8,000. Sometimes there may be the chance of bad debt. That means some person may not pay the amount to us. Okay, so usually business organizations make a provision for that, which is called a provision for doubtful debt or provide for doubtful debt. So doubtful debt is always calculated on sundry debtors because it is related to debtors. Okay, here 8,000 is there, and 5% of this debtors may not be realizable. We may not get this amount from our client because of some reason. There may be chance of getting the full amount, but however, because of their attitude, we may think that, or because of our business practices, we may provide some provision for that. Here, the business provides or keep a practice of providing 5% of their debtors as doubtful. Doubtful means it is suspectful to realize. Okay, so we have to find this amount. Always find or calculate this amount on what's the sundry debtors. Okay, and 8,000 into 5 by 100 means 400, isn't it? So 400 becomes doubtful debt. What is the treatment of this provision for doubtful debt? It should be shown on the debit side of the profit and loss account. Okay, show on the debit side of the profit and loss account. This 400 should be shown on the debit side of the profit and loss account. And while writing this sundry debtors on the asset side, deduct this 400 out of that. That means sundry debtors. Show the 8,000 in inner column. Deduct less provision for doubtful debt 400. Then 7,600 will be shown on the outer column. Okay. I will make this adjustment more clear at the time of writing up the statements. Okay. Now just listen to this and note in your notebook these treatments. Okay. So provision for doubtful should be shown on the debit side of the profit and loss account and deducted from the concerned debtors, sundry debtors in the balance sheet. Okay, and I have to say one more thing, and you must remember that, see, the depreciation is shown on the debit side of the P&L account and deducted from the concerned item. You remember? If this depreciation appear only in the trial balance, means the list of balance, just show it in the debit side of the profit and loss account, because item in the list of balance will be showed only once. Okay, so depreciation given in the trial balance or list of balances should be shown only where in the profit and loss account debit side. In the adjustment should be shown in two places. Show on the debit side of the profit and loss account and deduct from concerned asset. The same treatment is applicable to doubtful debts also. After calculating this, the provision for doubtful debt, we show on the debit side of the profit and loss account, isn't it? And deduct from the sundry debtors on the balance sheet. But you remember that if the provision for doubtful debt is given in your list of balance or trial balance, it should be considered in only one place which is credit side of the profit and loss account. Okay, if the provision for doubtful debt or reserve for doubtful debt is given in the trial balance or list of balance, it should be credited in the profit and loss account only. I think now it is clear. There is one more item, rent received in advance. Rent received means it's an income, isn't it? It's an income. So income received in advance. An expense paid in advance was already discussed. Rent paid in advance, then advertisement paid in advance. The expense paid in advance was already discussed. Here, the opposite item, income paid in advance is here. Rent paid in advance means income paid in advance. Okay. When income paid in advance is there in adjustment, it should be deducted from the concerned item. Here, concerned item is rent received. Rent received is here. This is a concerned item. You have to deduct this paid in received in advance should be the received in advance should be deducted from the concerned item on the credit side of the profit and loss account. Okay, and show on the liability side of the balance sheet. Refer this format of balance sheet, and on its liability side it is stated income received in advance. Okay, this format is already given to you, and it is there income received in advance. It is shown as a liability. Okay, here rent received in advance, it is an income received in advance. As it is an adjustment, it should be deducted from the concerned item in the profit and loss account and show on the liability side. Okay, and if the rent received in advance or any income received in advance is given in trial balance, it will appear only one place, isn't it? Which is to be shown on the liability side only. Liability side only. Okay. If it is given in the trial balance, should shown on the liability side only. And if it is an adjustment, it should be shown in two places. Deducted from the related item on the profit and loss account and show on the liability side also. Now I explained the whole question, and I think you wrote down this question. And everything, its treatment I'll explain here. And now we start to write up the statements. Okay. Now we are going to prepare the trading account, profit and loss account and balance sheet. At that time, we just refer this question and show how these items appear in the statements. Okay. That will be explained in the next video.